Okay, thank you so much, everyone, for joining us for our training today. Understanding the DSCR loan program. My name is Michael Kernodle. I want to invite each and every one of you guys here. Thank you for joining us. We still have people in the room. Whether you're a Graystone agent, you're an investor, you're just interested in this program, we are happy to have you here and we're excited. So I'm excited to introduce our speaker, and she's excited too. Her name is Vanessa Martin, and she's our operations manager of Lending Gig. She has plenty of information to give you today, so I'm not going to delay at all. I'm going to hand it over to Vanessa, and like I said, if you have any questions, please put it in the chat. Please raise your hand. We want to answer each and every one of them. So thank you again for joining us. And Vanessa, I'm going to hand it over to you to go ahead and start now. Thank you.
Oh, thank you so much, Michael. I appreciate that. I want to say thank you to everyone that's joining the call tonight. And I thought this was a great subject because at Lending Gig, there's plenty of ways for people to invest with no personal income. We have bridge loans, we have fix and flip loans, we have private lending, but one of the biggest and most popular programs we have is called the DSCR loan program. And tonight, that's what we're going to be going over. So let's get started, okay? So buying property using no personal income, right? And understanding what this program is, okay? And again, there's several ways that we can help you purchase property here at Lending Gig with no personal income. There's a bridge loan, private money, or the debt service loan, okay? And today, again, we're going to be focusing on the DSCR loan program. And DSCR loan is simply defined as a debt service coverage ratio product, and it's specifically for investment properties. What's great about this product, again, there's no personal income that the lender looks at. It's all based on the income of the property. So it measures the property's cash flow and its ability to cover its debt obligations. And what debt obligations are we talking about? We're talking about principal, interest, taxes, insurance, and of course, if there's any association fees with the property, that's going to get calculated in that as well, okay? The lenders use the calculation, again, to determine whether the property has enough operating income to pay back the debt, okay? So how do they calculate? How do they calculate this ratio, right, for DSCR? So DSCR is calculated by taking the monthly rental income and dividing it by the property's monthly debt obligations again, and you're going to look at principal, interest, taxes, insurance, and association dues. Many lenders have a minimum DSCR of 1.2%, which indicates a positive cash flow, right? The DSCR greater than or equal to the 1.2 means there's sufficient cash flow to cover the debt service, right? And a DSCR below 1.2 indicates that there's not enough cash flow to cover that debt service. So again, it's pretty simple. You know, once you have the formula, you can easily calculate the property and how much income it's going to generate. You should be able to do that fairly easily. So let's skip to the next page. I actually gave a little example here. So in this example, right, we have a purchase price of $250,000, right? The down payment is 20%, of course, which is pretty standard across the board. Any investment loan that you're looking at, it is going to be 20%, right? Some lenders want 30%, but for this example, we're using 20%. So the loan amount is $200,000. The taxes, we estimated $2,400 a year. You divide that by 12 is $200. The insurance is $1,800 a year. Again, you divide that by 12, which is going to give you your $150. And then I put in optional HOA fees because I wanted you to see the difference of what rents you're going to need for that property if you had HOA fees. So they use division. You can multiply right by that 1.2 to find out what rental income you should need to cover the debt. So with this example, again, if you look at it with a $200,000 loan, you have your principal and interest, right? You have your taxes and insurance, and you have your HOA fees. In the first example, it comes to $1918. So if you take that number and you multiply that, right, by the 1.2%, that rental income that you're going to need to cover that ratio, you're going to need $2,300, basically, right? So that's what you're going to need to cover that rent. And that's exactly the way the lender looks at it. So if you find a property and this is how much your rent, is you're going to be pulling in for that property, you're going to easily qualify, and you'll fall under that ratio that they're giving you. And if you can see without the HOA fees and you use the same calculation, your rent, again, is going to be a little bit lower because you don't have to, there's no HOA fees. So I hope that makes sense. And again, we can, address that at the end. So let's move on. Okay. Why choose a DSCR loan program, right? For a couple of reasons. The first, number one reason, right? No personal income. There's no personal income with these products. The loans are ideal for self-employed investors and investors with large portfolios because there's no limit with these loans, which is great. Normally with other conventional loans, they limit you, you're only allowed to have, 7, maybe even 10 properties with a regular conventional loan. With this product here, there's no limit how many loans you can have, how many properties you can have. So that is why this is probably the most popular with our investors. So the DSCR loans enable real estate investors to use just the rental income, right, as their coverage. So there's no personal income documentation needed. There's no tax returns. There's no W-2s. There's no paperwork as far as, they're not looking at any of your personal income. And it's done solely under a business name. So to qualify for this loan, it's really important that the investor has an LLC. So that's one of their requirements. You have an LLC, you have to have a business bank account, you have to have an EIN number. Their credit scores right now are a minimum of 680. We have seen lenders go a little bit lower than the 680, but again, that is going to affect your rate, and it may affect the terms of the loan as well, and it may affect your LTV, in other words, your loan to value ratio. So if you have a credit score that's lower than 680, you may have to come to the table with maybe 30% down, right? The appraisal part of it focuses, again, on the rental income rather than the resale, or what they call retail value. They use rent schedules. So when the appraiser comes out to this type of property, he's not just looking at, what the neighbor's home sold for. He's going to be looking at the rent schedules. What is the market rent in that area for those homes? So if you say you want to buy a property, and hopefully you've done your homework and you know what the rents are going to be, you can absolutely give the appraiser that report. That's what we do. We have an in-house appraiser that does all our appraisers for us. And we work with him and make sure that we have the correct rent schedules for any property that someone is looking to purchase, right? Insurance is required. However, the inspection process, again, it's a little bit different with a rental property, because most of the time they are looking at the life of the roof, the life of the HVAC, how much is on it. You're not looking for, of course they look at major things, but the inspection process is a little different, right? You can do a DSCR loan. We do have a 12-month interest-only option, or you can do a long-term 30-year. So it really just depends on what it is you're looking to do, okay? With this loan, you can buy the rate down, which is nice. They do offer that, something that's not only available in conventional loans, but also with this type of loan. We do have lenders where you can absolutely buy the rate down. They give you some rate structure choices. In other words, a lot of times with these loans, they have prepayment penalties. Again, if you choose maybe a higher prepayment penalty term, you may get a better rate. So that's, those are some of the choices. And this loan program is also available for refinances. So if you have a rental property and you're looking to refinance it, again, you don't have to use any of your personal income. They're going to use all of the income from the property. Okay. Okay, so let's look at the requirements for the DSCR loan and what they look at. Again, most of the lenders will require 20% down payment. You must have an LLC and a business EIN number. Okay, you must have a business operating agreement. So whether you're a sole proprietor or you have business partners, whoever's going to be on the loan needs to be in that. Whoever's in the LLC, that's who's going to be on the loan. So, and the good thing about that, if you have multiple partners, say you have 3 people that are in the LLC and one person has the higher credit score, they will take and use the highest credit score to get you your rate and term. So that's also a benefit of doing it in your business. The investment experience is preferred, but again, not necessary. We stress that because we do have lenders that will absolutely work with you if you are a first-time investor. The only caveat to that is that they will expect reserves in anywhere from 9 to 12 months. Maybe they'll go as low as 6. With investors that are experienced, they do 3 to 6 months. And what we mean by reserves is that you have to have 3 to 6 months of expenses to be able to cover that, again, that debt coverage in case of an emergency. And the reserves can come from anywhere. It can be a 401k, it can be an IRA, it can be, some kind of market account that you have, as long as you have availability to you and the lender is able to source that money, be able to find out where it came from. You can use it, it can come from pretty much anywhere. So again, experience, what they look at is you have a rental now, fix and flips, they look at, have you done a fix and flip in the past? That's the kind of experience that you're looking for. So you don't have to have a lot, but at least just one. And again, depending on the experience, the investor will need reserves. And again, the minimum credit score is 680. We have seen them go lower than 680. However, that is going to decrease the LTV that you get. So with a lower credit score, you may be having to come to the table with 30% down instead of, getting the full 80. And let's take a look at the property. So the property, unless the investor is doing a fix and flip loan, right, there's some things to consider when purchasing or refinancing an investment property. And we like to tell people about this because, again, the condition of the property, the age of the property, what kind of property it is, right? I suggest people, if you're looking for the highest debt ratio, I would stay away from properties that do have an HOA or other fees associated with the property, because again, that is going to cut into your ratio and you're going to have to come with a lot more income for the property to cover that. So again, you should only look for properties where you have to worry about covering your principal, interest, taxes, and insurance. Okay. So the condition of the property, they look at the age of the roof. If you have at least 2 years left on the roof, you should be fine. They look at the age of the electrical wiring in the house, the age of the HVAC and the water heater. Any updates to the property, it's so important that you have the proper permits pulled for this property. Again, especially if it's a refinance and you've done any upgrades to the property, you have to make sure that you have proper permitting done, because when they do the appraisal, they will pull those permits. So that's really important that all of that is done properly. And then the other good thing about these loans is that you do not necessarily need a tenant in place when you purchase a rental property. They only require a tenant in place in a signed lease if it's a refinance, because again, they have to be able to verify the rental income for the property on a refinance. But with a purchase, as long as the property is rent ready, so it's not a rehab property, as long as it is turnkey, right? You're able to purchase the property and get someone in there right away to rent it out. They will absolutely loan you the money on that property. So you do not have to have a signed lease. Those are some of the questions that we get. So some of the frequently asked questions that we get, how does the DSCR program compare to other types of loans, right? So I would say, again, the biggest and most attractive thing about this type of loan is there's no personal income. There's no W-2s, there's no tax returns. Unlike a conventional loan that requires income, again, they're only going to calculate the income on the property, and it's rental income, to where if you were to do the same thing under conventional, they're only going to give you a percentage of that rental income, because they're taking all of that information from your Schedule E or your Schedule C on your tax return. So they calculate a little bit differently with conventional loans, and they don't really give you the entire rental amount. So that's something to keep in mind. Do the qualifications, rules, and underwriting vary by lender? Yes, absolutely, right? Again, we work with these lenders that's all that they do. They specialize in these investment loans, whether it is fix and flip or a bridge loan or a interest only loan. All of them are going to have different criterias, but some of the things that we have seen that are basic is, again, that 20% down, minimum of 680 credit score, at least some experience, 3 to 6 months of reserves. And again, the rest of it just varies, by lender. Is there a minimum loan amount? Yes. The minimum loan amount for some of these lenders is $100,000. The good thing is that we do have access to private lending. So if you were to come across a project and you needed something that was below that, we can absolutely help you out with that. But again, the majority of these loans are all $100,000 minimum. And again, some lenders do go below the 680 credit score. It's not unheard of. I've seen them as low as 620. But again, that is going to affect the rate in terms of the loan. Some of the other questions, can you occupy the property at any time? Unfortunately, with rental properties, because it is an investment property, you cannot occupy. These are only for investment properties only. With that being said, short-term rentals are a little bit different. If you're purchasing a short-term rental, as the owner, you are allowed to stay at the property. You're allowed to stay at the property 2 weeks annually, right? So again, 2 weeks out of the year, absolutely, you can stay there, but you cannot occupy the property under this loan, right? First-time investors, yes, absolutely. We help first-time investors. Foreign nationals as well. This loan is absolutely open to foreign nationals as well. The requirements are a little bit different for foreign nationals. Of course, you have to have funds in a U.S. bank, right? But they don't require. Some of them don't even require a credit score in the United States. So those are a little bit different. We can handle those on a basis. One-to-one basis, but we do offer this for foreign nationals as well. There's no limit on how many properties you can have using this loan. And again, does the property have to have a tenant? If you are purchasing your first investment property, you don't necessarily have to have a tenant, but it does have to be rent ready. Otherwise, it's going to fall in what they consider a fix and flip loan or a rehab loan. So that those loans are typically 12 months interest only. So those are some of the frequently asked questions. So we can open it up now, Michael, for anyone that has questions. I hope I didn't talk too fast. So
I think that was perfect. We have a couple questions in the chat. They're just asking will you provide slides to the presentation. I guess they would want to relay this information as well.
yes, absolutely. Everyone that attended is going to get a copy of the presentation. And I also